Get your money out now. A major bank is on the brink of insolvency, and this bank is not alone. There are many others on the brink of collapse as well, and we are going to see a tsunami of insolvencies, and not just in America, but all around the world as well. I'm going to show you exactly what is going on and why it's actually happening as well. Norinchukin Bank out of Japan is known as the collateralized loan obligation whale of the world. It's been out of Japan and for years has been buying up CLOs in the West, sure that they are the best possible investment and the easiest way to get a crazy return on their investment. And because all the CLOs they're buying are AAA rated, there's no chance in hell their investments will lose money, just like all those other banks thought back in 2008. They're holding $357 billion worth of assets, but they've been getting absolutely hammered by the changing real estate market and interest rate market, and now they're sitting on massive unrealized losses that they are unable to escape from. They've just announced that they'll be selling $63 billion worth of government bonds because they're all unprofitable for them because of the state of interest rates. They were already expecting to lose about 500 billion yen in 2024, but now they've just announced that they're expecting that to rise to 1.5 trillion yen, which is about 10 billion US dollars in losses for a single year for one of the biggest holders of CLOs in the world. And that projection is if this sell-off and the rest of their business all goes well. But if market conditions change for the worse even slightly, those losses could balloon even further and present an even greater problem for the bank. And what is Norinchukin's solution to this imminent crisis? They've decided to go even further into the world of imaginary assets that supposedly print cash out of thin air in the form of CLOs or collateralized loan obligations. Now, what are CLOs? Well, if you remember back to the Big Short and the financial crisis of 2008, the CDOs that brought down the financial markets of the world were basically loads of different mortgages packaged up into a great big asset that banks could invest into easily, and they were rated by companies who were supposedly trying to determine how safe each block of mortgages were en masse. Of course, in the end, the ratings companies rated everything AAA and said everything was safe. So the banks bought everything, even the garbage, and when the economy turned and things started to get worse, the entire house of cards came crashing down. Collateralized loan obligations are obviously very similar to collateralized debt obligations, but they're packaged up corporate loans instead of mortgages. But again, they're rated by companies who seem to think everything is safe. And most websites out there online are complaining that highly rated CLOs in the A's are literally never going to find themselves in any trouble whatsoever. The trouble is that CLOs have already started to fall apart, booking millions in losses, even AAA rated ones, but I'll get onto that in a bit, because Norinchukin Bank is not alone in sitting on massive unrealized losses, as we all know. This is the exact same problem that saw a bunch of banks collapse last year, with even a few bank runs occurring as well. There are literally thousands of banks around the world who are on the surface fine, but they have massive unrealized losses that threaten to take the bank down. And whilst they're fine at the moment, the time will eventually come where they have to realize these losses, and then the blood will start to run. Ultimately, delinquency rates on consumer debt has been rising steadily for years at this point, and the delinquency rates on corporate debt is now starting to follow that trend as central banks have stuck true to their higher for longer catchphrase and refused to cut rates. Because of the yield curve inversion, money creation at the moment is at an all-time low, and this is often considered a good thing. But if this were 1971, I would be in agreement with that idea that it's good. But we live in debt-based societies where every single productive asset and resource sees its value released through the use of debt. With interest rates the way they are, debt is more expensive than makes fiscal sense for companies or individuals to take out. So the rate at which it's actually expanding is greatly diminished. And without debt in a debt-based society, everything grinds to a halt and ceases to function. We've already jumped the shark here, and it's too late to try and turn back time now. What we'll likely see going forward is central banks finally start to cut interest rates and pray that inflation doesn't erupt once more, whilst also allowing the debt markets to recover and stop our economies from falling apart, a very difficult needle to thread for the Fed and other central banks. But that will only happen when the central bank's hands have been forced, when more banks like Norinchukin see massive and unsustainable levels of losses and failures, and we sit upon another banking crisis like we did in 2008 and in 2023. So Norinchukin moving towards CLOs seems like a disaster waiting to happen, and it's like they've been losing too many hands of blackjack, so they've walked on over to the roulette table hoping to make all their money back at a different game. Now, we know at this point that a financial crisis is coming because we're currently within the second largest inverted yield curve in history, and whilst the yield curve isn't actually an indicator of a crisis, it is the cause of a crisis. Central Central banks are always forced to cut rates because the yield curve is inverted, not because the underlying conditions are right for a rate cut. Yield curve inversions destroy debt-based society as banks find themselves unable to make money taking on massive loans that they hide for a while. But eventually the chickens always come home to roost. Essentially, we're watching these central banks play the deadliest game of chicken in history, trying to keep rates high enough to ensure that inflation doesn't destroy us, whilst also well aware that keeping rates high is slowly destroying the banks and our financial systems as a whole. But the problem with these CLOs, they're supposedly rock-solid investment vehicles, but they're not rock-solid at all. The name itself, CLO, is so similar to CDO that should be ringing alarm bells, but the news of what's already happening to these CLOs is far more terrifying than the name. You see, a huge amount of these CLOs, and especially the CLOs that Norinchukin Bank are buying, are backed up by corporate real estate, and in particular office buildings. Yes, the exact same type of real estate that has been getting hammered for 4 years at this point. And if you've seen any of my videos before, you know how much Blackstone, one of the largest and most powerful financial institutions in the world, has been getting hurt by corporate real estate, as this trillion-dollar financial behemoth has actually seen billions of dollars worth of corporate real estate reduced to rubble. Blackstone have simply been refusing to pay off their debts. They don't believe the underlying office buildings are worth anything anymore, so the debt on top of them is simply being allowed to be ignored and defaulted upon, eventually to be pushed away to be repaid at some unknown future date. One of the biggest, most iconic buildings in all of London, HSBC's tower in Canary Wharf, has seen its only tenant abandon the building, and with space for 8,000 employees, there are only a handful of companies in the world who could even fit it up if they wanted to, but none of them do. As a result, this multi-billion-dollar building is now worth a mere fraction of what everyone thought it was worth just a few years ago. And many buildings are in a similar situation. They've been bought by savvy investors, not because they think the buildings are bargains, but because they plan to spend millions demolishing the buildings and then just selling the land alone, because that is worth more than the office blocks on top. 11 separate towers in Canary Wharf alone have seen their tenants announce their departure, and there's no way in hell that new tenants are going to come into frame anytime soon. And of course, as you'd expect from this sort of corporate real estate crisis, this has been impacting CLOs, and not just the crap ones, but the supposedly solid AAA rated ones as well. A $300 million note backed by corporate real estate in Manhattan was sold off at a $185 million loss. The note itself was split between AAA rated all the way down to F rated, and every single band except for AAA saw a 100% loss on their investment, with even the A-rated stuff losing 26% of its value. Then there was another CLO disaster in the UK. A note of £63 million or $80 million found itself in a similar situation, with a 73% loss across the entire note, and the A-rated stuff wasn't immune, as we'd been told it always would be, with millions in losses there as well. Both of these instances happened in the last month alone, and both of them were caused by crashing corporate real estate values, which caused the CLOs to be over-collateralized past the legal requirements for them, which forced them to be sold off. Now, sure, we've seen this happen before in 2008 and 2020 a lot, but those were during times of massive crisis when literally everything was falling apart and there was no denying it at all. But this is happening right now at a time where supposedly everything is good and these AAA rated CLOs are supposed to be invincible. And whilst you might expect those losses to be borne by billionaires who can afford to take them, the truth is that these losses are being borne by pension funds and charities who invested into AAA rated CLOs because they were insured by everyone that they are perfectly safe with no chance of losses whatsoever. Now our governments are actually well aware of how deadly this predicament is. The Fed in particular, because they recently added Norinchukin Bank out of Japan to the standing repo facility counterparties. And if you don't know what that means, don't worry at all. It basically means that the US government will be bailing out a Japanese bank when it inevitably crashes and falls apart with the real estate market. Norinchukin Bank are not alone, and these CLOs that fell apart are not unique. More of this news will break every single month as we go forward, and this will have dire consequences for all of us. Now, if you're hearing all this and you're worried about the state of the economy going forward and you want to learn how to protect yourself, I run an online business called Growth Operating, where I help content creators like YouTubers generate an income as I run the back-end business for them. That's why I haven't been as consistent with my YouTube uploads recently, because I've been focusing my time on this other business I'm running. But I am actually going to be running a free class on Thursday where I explain exactly how this business model works and how you can get started straight away without ever having to start a YouTube channel or make any content yourself. Link down below in the description for a free registration, and I'll see you on Thursday.